A single apple can spark a thought. I'm Edwin. When you think of Canada, what comes to mind? A quiet country? Snow? Maybe just America's neighbor? A place with little presence in global finance? But what if I told you some Canadian stocks have outperformed most of the US market over the past 5 years? Before we begin, a quick clarification. All return figures in this video are measured up to November 2025. This is to exclude the recent spike in oil stocks caused by geopolitical tensions in the Middle East. So what you're about to see reflects long-term performance, not short-term volatility. In other words, this is about a structural performance, not event-driven movements, not tech stocks, not the startups, oil companies. Today, let's look at Canada from a different angle. Through the stock market, Canada is one of the world's major energy producers, and two companies represent this reality: Canadian Natural Resources and Suncor Energy. If you bought Canadian Natural Resources at the bottom of March 2020, the dividends alone would have already paid back your entire initial investment. Your cost effectively becomes negative. Suncor, including dividends, its total return is over 500% in just 5 years. Now here's the interesting part. Since early 2022, oil prices have fallen by more than 50%. So what happened to these companies? Did their performance collapse? Not really. Their earnings and stock prices remained surprisingly strong. Now compare this with major U.S. oil companies, Chevron, Occidental Petroleum. Over the same period, 191% and 384%. Good returns, but nowhere close. And more importantly, their stock prices moved closely with oil prices. When oil drops, they drop. This difference is not about resources. It's about something deeper: management efficiency and commitment to shareholders. You might say, but tech represents the future. Fair enough. Let's look at NVIDIA. Since March 2020, over 4,000% return. Incredible. But here's the real question. How many people actually saw NVIDIA coming in 2020? Be honest, because I didn't. What about Google, a global blue chip company known by everyone? Its return since 2020 is around 486%, still far behind Canada's oil companies. Most people think investing is about predicting the future, but in reality, it's about something much simpler. Can a company clearly tell you what it will do and then actually deliver it? Back in 2020, Canadian energy companies already laid out their plans, how they would return capital, how they would reward shareholders. It wasn't hidden, it wasn't complicated, anyone could read it. So why did so many investors miss this? It's probably not intelligence, not effort. Maybe it's something else, something most people never think about: time efficiency. Over the past 5 years, countless investors traded U.S. stocks, searching for the next big winner. But unless they picked a very small number of companies, most of them underperformed two simple Canadian oil stocks. The difference is not intelligence. It's not effort. It's where your time goes. Simple, reliable, commitment-driven. When a system rewards consistency, efficiency compounds almost invisibly. That is Canada. And maybe this has nothing to do with Canada at all.